Well, hey, thanks, traders, for being here. It is good to be here again. I'm Dean Jenkins of followmetrades.com, and today I'm going to be talking about scanning. So let's just, I'm going to talk about how to scan really rapidly to find great, I'm going to focus on stock trades, but we can use the same method for futures and for Forex, really any instrument in any time frame. So don't check out if you're not into stocks, because it does work on other stuff too. So just a quick disclaimer before we get started. Um, so I'm presenting information for information purposes only. I'm not an investment advisor, and I have no desire to be one, and I'm not giving investment advice. Ultimately, each person has to make their own decision about their risk tolerance in any trades they take. I'm sharing my methods and my opinions, but I'm not giving financial advice. Okay, so I'm going to walk through, before I can talk about scanning, you have to have some criteria that you're going to scan for. You got to have something you're looking for. So I'll share some of my techniques and analysis and setups that I'm looking for. And I use a combination of Ichimoku Cloud, Elliott Wave together. I think I say on my opening slide, when East meets West, right? When two great trading systems agree, that's pretty powerful, right? Because they're independent studies. So I'll do a quick look at Ichimoku Cloud. I'll do a quick look at Elliott Wave. I'll talk about how I combine and use them together. But then we'll start scanning the markets. And we're going to walk out of this session with some good trading ideas. I'm going to actually scan the entire S&P 500 and identify some top trade ideas. And if you got any stocks that you are interested in, something you're watching, I'd be happy to take a look and use my technique and to give my opinion, my analysis on that as well. And so I'm going to go through this material really fast so we can get to the market, so we can start scanning, looking for trades. So you're welcome to download this presentation. I just posted a link into the chat area, and it's on the screen here. Tiny URL, MTI Rapid Scan. So you can download the PDF and study it later at your leisure. Okay. So let me get into it here. So this is some Ichimoku Cloud basics. So most people have heard of Ichimoku Cloud. I'm showing a screenshot of it here on the TradeStation platform. It's a free indicator that comes on most major platforms. I know it's on Thinkorswim, MetaTrader, eTrade, all that stuff, eSignal. NinjaTrader, you can download free copies of it. Okay, so here's what it looks like on the screen. It's got a couple lines. It's got, a purple line, yellow line, a green line, a red line, and some shading in between it. So let's walk through what those mean real quick. And if you're a Ichimoku Cloud guru, you're going to notice a missing line, and that's the Chiku line. I don't use that, and I'll talk about why. But just real quick, what are these lines, right? There's a fast line. It's very similar to a fast-moving average line. It's called the Tenkan. The fast line in Ichimoku is calculated differently than a standard moving average. Moving averages are calculated from the closing price of a number of bars back. The Ichimoku lines, the Tenkan fast line, is calculated from the average of the highest high, highest low in the look-back period. Okay, and sometimes this is a fast line. I've got it bolded in yellow here. And so just like with moving averages, when there's a crossover, fast over slow, it can indicate trend changes. Kaijun is the slow line. It's calculated the same way. It's just looking back more periods, more bars, and it's calculated from the highest high, the average of the highest high, highest low of the back number of X bars. Okay, and again, fast crossing over slow can indicate trend change. But just like with moving averages, there can be false calls on trend change. This green line here is called the Senkou Span A, and that is the upper boundary of what's called the cloud. Okay, and this cloud that forms actually can really pretty accurately predict some support and resistance areas. And I found it to be very helpful in my analysis. The Senkou Span B is the red line underneath, and again, it's the lower boundary of the cloud. And I say this is very accurate until it's not, right? Because eventually price does break through the cloud. So the cloud itself, the Kumo in Japanese, is this shaded area between the red and green area, and that's the actual cloud. Okay, so you can see the cloud is projected several bars out into the future. So it's a projection of what support or resistance is going to be. Most indicators are lagging in nature. Moving averages and all that stuff tell you a really good picture of what has already happened. The nice thing about the Ichimoku cloud is it projects out into the future what potential support and resistance areas are going to be. And it does so pretty well, again, until the trend changes, right? And so what we're looking for crossovers and breakouts. So we're looking for the fast to cross over the slow, and then the price to break through the cloud. And that can indicate a trend change, right? And there can be some false signals on that, but when it's right, it's really right. And we look at the cloud, and it can project, and usually does, some really good support. So price can pull back, and quite often, even if it goes into the cloud, end up reversing and continuing a trend. So I use the cloud as part of it. I don't think it's a full, complete system. It doesn't do everything I want, but it has some really, really good components, so I combine it. What it lacks is any kind of risk management capability and price targets. And I like to have price targets and absolutely risk management when I'm trading. So I use Elliott Wave with it, okay? And some people, when they hear about Elliott Wave, they roll their eyes a little bit. Oh, it's too complicated. There's all these patterns to memorize. And the way it's taught a lot of places, I agree with that. The way I teach it, the way I use it, is a very, very simple, repeatable thing. We look for very simple patterns, right? We're really only trying to trade. We really only have 2 setups, right? 2, maybe 3 patterns that we're looking for, or setups, right? What I really want to do is trade these impulsive waves. If you look at most charts, they do move in a series of pessimistic or optimistic and pessimistic, optimistic, pessimistic moves, right, in waves. And not every chart has a good Elliott wave pattern, and that's a mistake people use that's a mistake people make trying to use Elliott wave, is they try and stare a pattern onto the chart. It's not there, it's not there. But when it's there, it's super powerful. Here's what it looks like on a chart. So this is Vail. We traded both of these waves, 3 and 5, earlier this year. Made some really nice profit on it. Okay. So, I said it's simple. It is. Elliott wave is simple if the pattern's there. All you look for, first thing you want to do when you look at a chart is there a big impulsive move? And if there is, that's wave 3. And you can see I got it labeled at the top. There's wave 3. You see a big impulsive move. We got a wave 3. Was there wave 1? Wave 1's the first move up. Wave 2 is the first move down. They do not have to be big. They don't have to be any kind of proportion of wave 3. Just a move up, move down that doesn't go below the origin of the trend. And if you see this, you go, oh, if we got a wave 3, there's probably going to be a correction to that, or wave 4. And we just look for it to correct into a Fibonacci retracement zone. Fibonacci tools are free on all major platforms. Right? We want to see it retrace between 38.2 to 61.8%. If it does that and it heads back up, there is a super high probability of a wave 5. And we can project the wave 5 target zone using Fibonacci extensions. Most wave 5s, after an impulsive, corrective, and now a new impulsive move, extend up to 61.8 to 100%. Okay, so we look for those patterns. We look for a breakout into wave 3. We sometimes trade wave 4. Wave 5s are the highest probability. So we just look for some, I call them shapes on the chart. Okay, and when we overlay Ichimoku Cloud with Elliott Wave, what the Ichimoku Cloud does is gives us some additional confirmation, right? So here was a wave 3 entry, right as we had, a fast over slow crossover, price breaking above the cloud. Wave 3 really was getting started, and it did, right? And then we had a retracement. Price came down through the cloud. The trend changed from an impulsive wave down to a corrective wave, and then we were getting ready to take the next one, the next impulsive wave up. You can see we had a crossover, we had price break up. There was a great entry there, right? And that was a nice trade. So that's how I combine Ichimoku Cloud and Elliott Wave. I really look at the wave counts and price action, and I use the cloud to confirm the entry. I use a third thing in my thinking, and this is Dow theory. Okay, and it just helps. It helps confirm when you're in a trade and when the trade has the trend. When you're in a trade, hopefully, helps you know when you're in a trend and it helps you know when the trend has changed and ended, and maybe a new direction has begun, right? So this is not complete Dow theory. This is just part of it, but it says when you're in a bullish trend, right, it's identified by higher highs, higher lows, higher highs, higher lows, and you got a bull trend until that pattern's broken. Bearish trend is lower lows, lower highs, lower lows, lower highs, till that trend is broken. And eventually, trends get broken, right? The end. Nothing goes on forever, right? So bullish trend, it's confirmed when you get 3 data points, a high, a higher low, and a new high. And as long as that continues, you got a bullish trend. And then when you have a higher high, higher low, you get a lower high, and you take out the previous low, a pretty good chance that the trend has turned on you. Same thing with the downtrend, right? Just the opposite there. So I use Dow theory just in confirming, have we really seen evidence of a trend starting, either out of a sideways channeling market into a new trend, or, the end of an impulsive move and a corrective wave beginning, or the end of a corrective wave and the next impulsive wave beginning. Before we look at the charts, here's my final check, right? I want to really get a really good pattern on a chart, a high probability trade, confirmed by Elliott wave, confirmed by the Ichimoku cloud, evidence of a trend beginning using Dow theory. But then all those things give me a high probability, right? I want to make sure I have a clear support resistance area for risk management, right? I never take a trade without placing a stop. People can argue philosophically about that. That, wow, the market makers are looking for my stops, and they go, take them out and shriek with glee and run off. I don't believe that. I'm too small. I'm too small of a part of the market, right? So I have live stops on all my trades. But whether you believe in that or not, you should at least draw a stop on your chart and absolutely be willing to take the trade off if it hits your stop. And so I believe firmly in risk management and controlling the amount of loss that is possible for any given trade and stopping the trade at that loss level. That's for me it's worked for me, and I've seen that for many other traders. Turn the corner to consistent profitabilities when you control loss, right? I never take a trade that doesn't have the potential to win more than it loses, so I look for a high reward to risk. Okay, and so here's just quick examples of the math. First thing I do is calculate risk per share. I never go into a trade. Of course, the entry price. I know a clear stop price, right? And so all you do is take the entry minus the stop on a long trade, and that gives you the risk per share. Right? In this case, this example, this was Merge Healthcare. $5 entry, $4.44 stop, so the risk per share is 56 cents, right? I want to know what my potential reward per share is, right? I established a target. Targets are hard on wave 3 and new impulsive moves, but on wave 4, corrective wave trades, and wave 5, it's real easy. Right, we've got Fibonacci levels to look at. So I calculate a reward per share. There's typically, I take the more conservative one for doing my math. So here the target 664, we're getting in at $5, $1.64 profit per share. That gives me a reward to risk ratio of 2.93 to 1. Well, that's good for me, right? I never take one that's lower than 1.2. And 1.2 is kind of sketchy. I like to be above 2 to 1, 3 to 1, 4 to 1, right? So there's potential profit at the low target and at the high target. So that's a real fast look, right? Ichimoku cloud, Elliott wave, Dow theory, and some math for entry. I actually calculate my position size. I think it's a mistake to take the same position size every time. A lot of traders do that. Go, okay, I'm going to put on $10,000 per trade, or I trade $1,000 per trade. I take that risk per share amount, and I use 2%. I say 2%. I'm only willing to lose 2% of my account on any given trade, because I can weather, 1 or 2 or 3 or 4 losses, if the market's going the wrong way or whatever, right? I can weather 2% hits to my account, right? And over the course of, a few months, a quarter, a year, right? If my win rate's up and my winners are bigger than my losers, it's no big deal, right? Coming back from a 20, 30, 40% loss on a single trade, that is really hard to come back from. That is really hard emotionally, psychologically, and financially. It's hard to come back from a 30, 40% hit. I'm never going to let that happen. I'm never going to lose that much money on a trade. Okay? Wouldn't be prudent, G1 would say. All right. So the title of this presentation, what I really came to talk about was scanning, right? So I showed you my trade setups. If you have different trade setups you like, as long as you can load indicators into a table, you know, you can load numerical indicator values into a table. TradeStation, I like that. That's my favorite platform, right? It's got what they call radar screen. So I'm able to load indicators into TradeStation radar screen and run analysis on any set of symbols I want. Okay, so I'm gonna demonstrate it here. I know NinjaTrader's got similar things. I'm sure Thinkorswim has something like it, right? I'm using my TradeStation radar screen. I'm using the Ichimoku Cloud module and Microsoft Excel, because Excel is really, really good at formulas and sorting and doing all this kind of stuff. So here's what I do. I'll get over here and show you. So here is my TradeStation screen. Got the S&P 500 up here right now. Boy, look how we're hitting up against this all-time high put in back in August. It's slowing down here, right? It's deciding. Here's the Trump bump. Are we going to bust through this? You know, next week's a holiday week. Don't know. Probably going to have some volume come out of the market, a little bit of, you know, twitchiness. I think we're probably going to reverse off this and maybe not put in a new high, but I have like a 51% probability on that. I don't think we know. It's really, really uncertain right now. But hey, let's take a look at this scan, all right? So I've got the entire S&P 500 loaded here on radar screen. You can see if I scroll down, we have got 506 symbols. Who knew that there was 506 stocks in the S&P 500, right? Got the entire index loaded up here. So this would be really laborious to go through here. I've got the Ichimoku Cloud values loaded as well. So this would really be laborious, right? And as good as this is, having all these computed indicator values for all these stocks, these tools, the radar screen is not very good at sorting, filtering, or doing additional computations. But the nice thing is you can just click here, copy this, and export that whole monster to Excel. That's what I've done. Here it is, the output from radar screen in Excel, all 506 stocks. So I've got all the Ichimoku Cloud computed numbers here and the signals, and what I've done is just put some logic statements in. I said, hey, if this thing is below the cloud and has a downtrend, that's a bullish signal. That means the price that we have a crossover, fast over, slow down, and we have price down below the cloud. I'm going to call that true. That's a true bearish signal. And if it's above the cloud and the crossover is up, that's a true bullish signal. And then I'm computing the percent of price below the cloud because I want to get the ones that just broke, right? Those are the highest probability. So let's look for some bearish trades here. I'm just going to use the data sorting filter, sort this. So I'm going to sort by, let's look for bears, right? And largest to smallest, and then by percent. Okay, boom, there it is. Looking at a question right here. Yeah, you can ask him, Stephen. Stephen's asking a question about the last presenter. I think his contact information is there. Okay, so look here, I've got a list sorted now of S&P 500 symbols that have a bearish signal, and it's prioritized in sort order by the ones that are just broke down through the cloud. And so now I can attack this list, right, in priority order and start moving through it. I don't have to go look at 500 stocks, right? So the first one here is HES. Let's just go look at that chart and see if that looks like a good trade using my method. And then I'll scan through here. I'm going to find you some trades. We're not leaving until we do. And then I'll look at your trade ideas as well. Okay. Well, by golly, it is below the cloud, right? So the indicator was right. And you know what? I see, remember I said I look for shapes, right? Look for shapes. So what I see, I said wave three is easy to spot, right? It's the biggest move on the page. Well, this was a monstrous move down, and it's retraced. Has it retraced into the expected wave four zone? I don't have to guess. I have the data here. Let's measure it. So there's the beginning. There it is. Yeah, it retraced in the wave four zone. Went a little bit over. That doesn't trouble me. As long as it stays under 76.4, 15% will go over a little bit, 15% will fall short a little bit, right? As long as it doesn't go over 76.4, okay? And as long as we did have a change in trend, a dramatic change in trend, see how it broke through the cloud? So that's a good four there. Let's see what the target for 5 is, right? We just use the Fibonacci extensions, go from the same points, here to here to here. That gives me a price target zone of 34.73 to 16.92. Okay, this is highly probable stuff. This stuff works. Not every time, nothing's guaranteed, but it works a lot of the time. It's highly probable. Okay, so now the next question is, what's the reward to risk on this trade? So I just use a quick little markup scheme here. This is ready to go, right? All the criteria is met for this trend, right? We've had a series of lower lows, lower highs, lower lows. It's pulled up into a lower high. It's under the cloud. Wave 5 is clearly underway with this Dow theory thing. It's under the cloud. We've got a nice price target. So let's say my entry would be right under this last price bar from Friday. So I just draw it there as close as I can. Where would my stop be? Well, my stop would be, right, lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows. So we know that the downtrend continues until that pattern gets broken. If that pattern gets broken, I want to be out. It would be broken right there at the last lower high. So that's where my stop would be. And now I've got a target. I'm going to be conservative. I'm going to put my target down here at the first line here on the target zone. So now all I got to do is look at the distance. Right? What's the distance? I can do the math and calculate this exactly, right? But if I look at the distance between my entry and my stop and the distance between my entry and my target, well, this is 3 or 4 times, right? This has a good reward to risk entry. So this meets all my criteria. It's a high probable trade. I got a clear stop area. I got a nice target zone, right? This thing's trading at you know, whatever, it closed at 50.97 on Friday. It trades at big volume, 5 million shares on Friday anyway. Now, I would go look. I never heard of Hess Corporation. I have no idea what they do. I'd go look. I want to know. A little bronchitis. I'm sorry. Let me. I would want to know what sector they're in, and if, you know, do they have earnings coming out Monday morning? Have they filed for bankruptcy? Is there an M&A pending? I would do a cursory scan. I don't care about the earnings statement. I don't care who's CEO. I don't really care. I don't believe in fundamental analysis in the short term, and this is a short-term trade. But I'd want to know if there's a landmine out there. So I do a quick scan, make sure everything's cool, and then I'm ready to take this trade. And I would trade this. I like trading with directional options when I've got a price target in a direction. I just go buy the puts on this thing, and I'd make sure they are, you know, at least 90 to 120 days out. You don't want to be in that rapid time decay zone, right? Some people go, hey, don't, you know, if you're just buying options, don't they expire worthless? Not mine. I have no intention of holding that option contract until expiration. My intention is to get this next impulsive wave, get it done long before the expiration of the option contract, and go sell that thing back and get out of it, move my capital to the next trade. So that's my deal. So we found a good trade there. It's HES. Let's scan down the rest of the list. The next one was CINF. So this is interesting. Remember I said you can spot wave 3 from a mile away. It's the biggest, most dramatic price move on the page, right? Well, there it is, most of this year. And it's had a retracement, and now it's starting to head back up. So this is a pretty interesting chart. There's wave 1 and 2, 1, 2. Okay, so let's just measure and see if that correction met the wave 4 guideline. It sure did, right? It fell just a little bit short. Remember I said about 15% will. It was close enough. It did break through. It was a downtrend. Okay. Now, if this dude busts above, it hasn't yet, right? But if this dude busts above the cloud, and we're just getting ready to cross over here on the Kaiju and Tenkan line, so this is just about ready to go. So if that's the bottom of 4 right there, where's 5 going? 5 is going up there, way up there. Okay. So we don't know yet. We have to wait for this one before we can do our reward to risk calculation. Let me draw it for you. A pen tool out. So it's unlikely that this is just going to continue in a straight line. It's not how price moves. Price moves in higher highs, higher lows. So on this journey, right, we're probably going to get something like this. So whatever the new low is after a new high is put in, that's where our stop is going to be, and then we can calculate reward to risk on it. If our stop's going to be down here and our entry is here, we still have a pretty good reward, right? But the likelihood is we're going to get something different as it moves up. Okay, so we got to wait. I would do what I call put a watch on this one, which means I would put an alert when it's, yeah, let's let it really break that thing. So about 75, 85. Let's have an alert set up so I get triggered. I get notified when price breaks above that cloud. Then we'll come back and look at it and see about taking a long trade on that one. So that one's a good one to watch. Steven's asking, do I prefer near the money or at the money? I like in the money because I'm taking directional trades, right? And I'm planning to sell the contract and get out of it. I want a high delta. And to get high deltas, you got to be in the money. So I look at my key metrics for, I want to make sure I have plenty of time, and then I look at the ratio of intrinsic to extrinsic value, right? I don't want to pay for too much extrinsic value for time and volatility. I want to pay primarily for intrinsic value, right? And I want a high delta. So I get the best price I can meeting those criteria, right? Because those are the ones that are going to increase in price, in premium, the fastest. The higher the delta, the higher the premium's going to go up if the trade's going your way, and you can get out and take your profit that way. And I know there's, an infinite number of option strategies out there, right? But I'm primarily looking again at high probability directional moves on the chart. If you got a high probability directional move, right, I believe the most profitable trade on that is a directional option trade, buying the puts, buying the calls. And I also, again, I have a stop limit on every trade that I take. I never put a stop order on an option, but I put an alert, and if my underlying shares hit that alert level, my stop level, I go instantly get out of the option position, usually for a very small loss, right? For a $5,000 position, you lose $200-300, right, when you hit your stop, roughly. Right, so that's pretty good, and the ones that win, double or triple in price. So that's a pretty good payoff. All right, let's keep cruising our list. Let's keep cruising, and so here's my spreadsheet, SRCL. Let's see if this one looks any good. So it's got a clear downtrend. It may be turning up here at the bottom. This is a big gappy thing. This thing, you can almost tell when it announces earnings or something happens, huh? It's not an orderly chart, and there are better ones out there, so I don't mess around with disorderly charts. Not interested. SCG. I guess I typed that wrong, huh? This is very similar to the other one that we just looked at, in that we've got a big impulsive move. This it hasn't retraced enough yet to be a wave 4. So that one's got a ways to go. Yeah, it's fallen a little bit short here. I would like to see clearer evidence of it getting into wave 4, and then so you got to wait for wave 4 to finish, and you got to wait for wave 5. So that one, it could be okay in the future, but it's not okay right now. Next one on the list, AWK. Okay, This one, this is a very orderly chart. I really like this one. This is American Water Works. American Water Works. Okay. I like the fact that this is a very orderly market. It moves in a very linear, predictable fashion. And look at that baby. It is in wave 4 now and starting to show some signs. So it had very clear lower lows, lower highs, lower lows, lower highs. Now it's consolidating. I would have an alert on this one, and I will. I like this one. It's not ready yet. We got to see it break and get some evidence of an uptrend starting. But this one could be really, really good. Okay, so we were looking for shorts, but we found some that were in wave 4 here. Let's look for longs. Okay, look for long trades. Not to be pessimists. We can just resort our sheet. And look for bullish signals. Now, bullish trades are going to be harder to find. Okay, they're going to be harder to find. Why? Because we've been in a bull market for 7.5 years, and what you're going to see is a lot of very mature bullish trends. So I did peek ahead. I did scan through this list before, and we've got a good one here at HON. So let me show you that. Okay. That's Friday's close data there. So HON, Honeywell. If you remember this, they got whacked on the bad earnings report back in early October. They dropped dramatically. But we're in a brave new world now, right? We're in the Trump bump, and infrastructure and equipment and all that kind of stuff may have a whole new picture. So that was wave 4. This was a pretty orderly wave 3, right? Not as smooth as that other water stock we looked at, but right into wave 4, right into wave 4, and now pretty clear evidence of wave 5. And where's the wave 5 target? It is up here, 121.70 to 131. It's a go right now. One of the things you might want to watch, right? Here's this gap down. Some gaps fill before continuing the other direction. So a conservative move on this would be let it clear the gap, right? Let it get, why not take out this high here? If you take out this high here and you got a low stop, you might have some target left in this, okay? This top of the gap could be some overhead resistance. You want to be a little careful about that one because that's a pretty big anomaly in this chart, okay? So that was a long, let me look here, there was one more, CNP. Center Point Energy. So look at this, big dramatic move up, a pretty nice wave 4, it came real close enough, right? And now a pretty orderly move up. Now this is an energy stock, but it really doesn't seem to be tied to oil, does it? Because it's not doing anything close to what oil's doing, right? If you look at the oil futures contract real quick. It ain't doing that, right? It's moving completely independent. So pretty nice here, an impulsive move up, saying trades at big volumes, probably got an option market. It's pulled back into a 4. I like this one, right? I like this one. And where's the wave 5 target? Oh, it's huge. It's huge, right? This one looks pretty good, CNP. So we walked away with several good ideas, right? HES, a watch list on AWK, we got Honeywell, be a little careful, and then CNP. This one's ready to go right now. Okay. So go ahead and type in any symbols. People did it earlier. I'd be happy to scan your stuff here. Michael, GWPH. Let's take a look at GWPH. What do you got going on here? What is this thing? Pharmaceutical. We're long another pharmaceutical right now. You can either be really right or really wrong on those. So this is not a very orderly market. And I said one of the mistakes people make trying to use Elliott wave is to force an Elliott wave pattern onto a chart. And what we got here is, big move down, big move up. This is not a corrective wave to that move down. It's gone too far up. So this could be a new impulsive wave, but it has to pull back down, right? And then start the next one. It's nowhere close to that. It's got a lower low, lower high. It's heading into the cloud. So you could get a wave four, but it's got a long way to retrace to be a wave four. And this is a gappy bugger. So I don't like this chart, right? There's just better ones out there, so I'm not excited about that one. Okay. Scott, is that a symbol, MAR? I'll try it. Apparently it is. Marriott. So when I do, I teach classes. I teach master trader courses that teach people how to analyze charts and use all these tools that I'm showing you really, really fast. And you know, we do drills, basically index card drills here on charts, where we want to be able to assess a pattern, to look at a pattern and see whether it's worth trading in a few seconds, 2 or 3 seconds. We should know whether it's worth trading. And what I tell them is, you know, label this one of 3 things. Either it's a trend, it's a channel, or it's a mess, right? Marriott's a mess. There's no clear trend, and it's certainly not in a channel. It's all over the place. So it's a mess. So I'm not going to spend time trying to analyze a mess. Right. Hope you're not offended, Scott. I think the world of you. I just don't like that chart. All right. Let me check my time here. Renee, I think I'm good, right? I probably got a good 10 minutes at least left here.
You have about 5 minutes.
About 5 minutes.
Yes.
Okay. I'm your makeup guy, huh? Catching us back up. All right. NVIDIA. Look at this trend this thing's in. So this is a wonderful trend, and it would have been awesome to be in. It's really mature. You know, what's it going to do next? It could go double from here. I don't know. It's sitting here at 93 bucks. At some point, you know, nearly all big trends like this correct. Okay. When's that going to start? No idea. You know, probably the day I took the long order. That's when it would start. So since I can't project anything with it, I'm not going to do anything with it. I would wait for the correction. Right. Once the correction started, there may be a good short trade, and then after it's over, there may be another good long trade. So. Yeah, nothing cooking there for NVIDIA. That's an impressive trend, though, isn't it? Tron Derek would like to look at AMD. Every time I look at AMD, I cry. Because I have been watching this, and I just lost track of it. My alert didn't get set right. I was waiting for this breakout. It happened, and I missed it. Okay? That was a wonderful trend, right? And we were looking at it just like NVIDIA. We were looking at it back here going, yeah, that's over, man. It's going to correct. Well, it did, and it corrected right into the wave 4 zone. And it started again, and it's heading up to the target zone. So this is just about done. The target zone 946 to 1184. So big sharp move here. You know, it won't keep going straight. It probably pull back, but it's highly probable to end up here in the target zone. So that's pretty good. Okay, we'll do one more, and then I'm going to do my wrap for Pavlos. Pavlos is one of my buddies. His picks are always good. So I have high expectations, Pavlos. We're looking at a CEQB, Crestwood Equity Partners. Okay. Look at this now. So, you know, what a massive drop in price. Look at it now. If that was the EKG, somebody'd be calling for a crash cart, right? Wake this thing up. But it's showing some signs of life. It's showing some signs of life. The swings are getting bigger. I would let this take out this last high here. Make sure it's for real, no head fakes. And if it is for real and it starts taking off, right, massive, you know, where could this thing go? If it's really going to correct, you know, to that impulsive wave, it's going to correct up here to, you know, 40 to 55 bucks. It's going to be a monster. So, you know, this is Equity Partners. I'd go research that, make sure I understood what it was, right, and if there's anything. You know, some of the ETFs and stuff, you have to be careful. If, you know, your 2x, 3x stuff, they settle in cash, and this kind of analysis doesn't always apply to them. They're intended to be short-term, you know, kind of volatility-based trading instruments. So be careful. Make sure it's actually, you know, a real equity that these rules would apply to. Okay, hey, you're welcome, Tron Derek. And the pattern here looks good, Pavlos. Just check those things. Be careful. Hey, so I need to just go ahead and do my wrap, talk about some next steps here. Get the right deal on the screen, okay? We did that. We looked at some live charts. So hey, if you like that idea of using Ichimoku and Elliott Wave together, give it a shot. You know, anything you try new, yeah, check that out in sim or demo first. Don't put real money on the line on an untested theory. Make sure it works for you. You know, a trading system can be awesome, but it may be that I couldn't trade it because it just doesn't fit my beliefs and my psychology, and the same thing for you. You know, maybe my trading system is awesome. I'm making a lot of money with it. My subscribers are too. It may not work for you. It may not make sense to you, so be sure to test it in sim. If you're interested in following my stock picks, do I have a deal for you, right? I pick stocks. I publish them to my subscribers. They're the stocks that I'm buying with my own money, my own account. That's how I got started here. I was trading my own account and interacting with people, and they go, hey, can we see your picks before you take them? And it turned into a business. And you can absolutely see my picks before I take them. Okay. And you can join me in my live trading room. We do a live trading room in the mornings around the market open, Monday through Thursday. So stock picks, as of the last reconciliation this year to date, we're up 24%. The indexes are struggling a little bit. Again, a big part of that is my emphasis on risk management and only taking high potential trades. I publish 1 to 2 picks a week, same ones I'm buying for myself, right? I give updates on the trades. You know, every week we do a video. We have a live stock chat session where we go over it. If there's an update midweek, I publish it and go, hey, move the stop, take some profit, whatever, right? I keep you updated. I publish both option and share information, so you can trade those by buying the shares, selling the shares, or by option contracts. I publish both. For webinar attendees, you can give this a shot. Take 10-day trial for $7, and you just want to make sure you're serious. Put $7 up. But if it's not for you, it's not your thing, you don't like it, or it just doesn't fit your trading style, shoot me a note. Give you your money back. 100% refund. No questions asked. No hard feelings. And there is a link for that stock pick trial. Just posted it, I think. Yes, there it is. Okay, tiny URL, MTI-7-trial. So it's a pretty good deal, and you get a discount afterwards. It's $97 a month, normally $127, and that's month to month. You can cancel at any time, right? So, but you get to try it for 10 days. You get to see the picks that I have right now. We're in some good ones, right? And I'm getting ready to publish some more this weekend. So you get to see those, and you get to see the ones I publish next weekend. And you can join our stock pick chat session this week, Wednesday. So, and it includes a free phone consultation with me. If you have any questions, I'm happy to jump on the phone, share screens, and do whatever it takes to get you successful going on the service there. So I encourage you to check that out. $7, right? It's essentially free because I'll give you your $7 back if it's not your thing. So definitely, you know, you want to consider that. And the link is there in the chat area. And we do have a live trading room Monday through Thursday, except for holidays and stuff. I trade the E-mini, the gold and oil, you know, short time frames, intraday. The live trading room, I'll give you a discount, 31% off. You can get in for $27 a month. And I demonstrate my methods. We do a lot of teaching in the room. So all these methods that I'm covering, what we're talking about here is what I use, and I go into it in more detail. And if you would like to join us in the live trading room for $27 a month, again, month to month, you can cancel anytime you want. Right? I just put a link in for that. So there you go. Okay, Steven says he's in the room. Yeah, I recognize your name, Steve. Yeah, glad to have you there. Okay, well that's the material I'd hoped to cover. Again, I'm Dean Jenkins, followmetrades.com, and it was great to be here. I always enjoy coming to the Investor Inspiration Series and presenting on a Saturday morning. I find that there's pretty serious traders here, so I enjoy it, and thank you for your attention. Again, there's a link. You can download the PDF of the material. I'm sure there's a recording of the event, and I think I'm done.